Okay, guys, in the previous teaching, we talked a lot about risk management and all those fun stuff. All right. So now we're going to go back to the technical analysis, and today we are going to understand institutional order flow. Right. Institutional order flow. All right. Institutional order flow. So when we are talking about institutional order flow, we are looking at the direction of the market. Right. It's very easy to This is actually one of the easiest topics when it comes to technical analysis. Institutional order flow, very, very simple and straight to the point, right? But it's something that many people don't quite understand, right? Now, institutional order flow simply refers to the prevalent direction of the market, right? The prevalent direction of the market. So, what side is the market prevalent towards, right? Right. So that's the prevalent direction market. What direction is the market prevalently going to? All right. So it's the prevalent direction of the market. All right. So now, how do you identify order flow? Right. Order flow is simply defined or identified by this. So typically, you're looking at the up or down move before the market breaks structure in a direction. So the market can, get something like this. All right. So now it's what we call order flow, right? We are looking at that last up push before the market makes a new low, right? So they refer to as a bullish or a bearish order flow, right? Sometimes it's not always mitigated, right? But let us make this right. Let's make this nice. So this is what our order flow looks like, right? You're looking at that last up push before the market does what? Makes what? A new low, right? So let's just say this one does not connect. All right. Right. So this was called an order flow, right? The last up push before the market breaks to the downside, right? Sometimes it can be very, very large. Like this example now, this is all an order flow, right? So this is what we refer to as a bearish order flow. Is that last up push, right? Remember I said the last up push, not last candle, right? So this is a bearish order flow now. So when you see the market delivering like this, number one, you want to see the market create an up push and then displace to the downside. All right. So now you have your displacement to the downside. This is a displacement to the downside, and the market is breaking what? Structural lows, right? We can say this market is what having what? A bearish order flow, right? So this is how to identify order flow. You see the market creating some kind of push up um to the opposite direction and then breaking downwards, right? So market creates a push up and then what? A break to the downside, right? So you mark that whole area where it pushed up and then you expect price to come back there. And act of price coming back here is what we call mitigation, right? Mitigation is the part of price coming back to an area of interest, right? Mitigation is where when price comes back to what? An area of interest, right? This is where I'm giving my giveaway, right? I want you guys to type this. Mitigation is when price comes back to an area of interest. So just type that, screenshot this part and post it on my on your Twitter handle, right, tagging me, and also comment it in the comment section. So you comment in two places. Number one, here on YouTube, right? Mitigation is when price comes back to an area of interest. So you write it here on YouTube and also write it on your social media account while tagging me on Twitter, right? So that I know that you're the one. right? Yesterday we gave out a cash prize to someone, right? We gave out some a cash gift of 5,000 naira to someone yesterday because of this simple task. You guys think I'm joking with you guys? Yesterday I gave out 5,000 naira to someone that actually did this thing I'm asking you guys to do. I want to reward only active followers. If you're active, I will know because you'll be watching these videos, right? The task are given in the videos. So someone that's not watching the videos will not be able to know what the task is, right? So you have to watch the videos to know what the task is, right? So just simply do what I said you should do, and then I will see you guys. Let me just quickly show you guys the cash giveaway that was given to someone for simply accomplishing the task. Right, this is our 22 days YouTube mentorship. Right, so watch this. So this is my Telegram channel now. So you can see on Telegram that look at the comments here. Look at his comment on YouTube. Right, I told him he has won a cash gift for 5,000 naira. All right, I noticed the dedication, and then I collected his details, and then you can see where I sent the money to him. It was through his Twitter page. So you also have to come look at it. You can see his account number, you can see his name, you can see where I sent the money to him. Right. So this is why you should be very, very active on the on the Twitter page and also the YouTube channel, because most of my giveaways will be happening on this YouTube channel, right? So back to the points. So this is all for bearish order flow. Remember, write down mitigation is when price returns to the last, area of interest, and then post it on YouTube here and also post it on your social media accounts. Why tagging me? All right, so that is it. So now for a bullish order flow, that is also quite simple. A bullish order flow is also quite simple, right? For a bullish order flow, this is it. So a bullish order flow is just the reverse of everything we've been saying. Just up, come down, down goes up, right? That is what. So bullish order flow is simply when you see price creating those series of last down pushes. Might see something like this, market does something like this, take a liquidity and then run up, right? That's created an order flow there. I see market, do something like this, they run up again, and then something like this. So it just depends, right? So this is what we call order flow, right? So this last down push before they break up, so to call it an order flow. And inside this one now, we have to identify the very last impulsive move. Don't worry, I will show you guys real chart very soon, right? So inside this guy here, the order flow can actually be this whole candle, right? It can be this whole candle, can be the order flow. But if you're very technically sound, you can go to the lower time frame and then identify exactly where the order flow is coming from, all right, to help you be very precise with what you're doing, right? So let's take this off and then go to the rechart ASAP. All right, so this is a rechart now. This is a rechart. All right, so let's go to, this is 45 minutes time frame, right? So let's begin. So you can see order flow, how this thing is printing, right? So from this point here, you can see that okay, let's start from here. I want to go back very well. So you can see bearish order flow printing from here. So we had a bullish order flow here, right? You can see how price went above and then came back to tapping to that point and then pushed higher. So finally, market actually broke through, right? There was actually a change of character here. You can see a bullish order flow here. You can see this last down push, right? This is the last down push before the market broke higher. You can see how price came back to that specific area. But it came to this candle specifically. This was the very last candle before the impulsive move to the upside. But if you're judging by order flow, you have to mark the whole down push. Alright, this is somewhere around there. This was the last order flow. Market broke bullish. Then you can see that order flow printed. The market did not actually respect this very well. It kind of broke structure. So you can now say, okay, this is our bearish order flow here. Had the bearish order flow here. Right? Because it was the last up push before the market was broke to the downside, right? So you can see how these things happen or repeat. You can see this push up before the market broke this low. Although it was not very, very clear. Right? So watch this, watch this, watch this. Watch this. The market pushed up above this high and then broke what? Below this low. So you can see that there was also a bearish order flow here. So market created an order flow there. You can see our price came back into it, right? You can see the whole thing here that happens. You can see market do something like this, break below, and then come back. So you can see how it happened. It's pushed above here, broke down below this low here. Let me just mark the low for you guys to see. All right, so this is the low. Then it came back to that order flow, right? So that is how this is occur. So we have another order flow here. There was a last push up. Right, so you can see this last push up before the continuation break to the downside, right? The price never come back there. Don't think it never came back to this one. All right, did it come back? Let's just quickly check. All right. Oh, okay. It actually came back, but it did not respect it anymore because there was a market structure change. Right, there was a break of structure. Order flow is best used when it is in line with what the current structure of the market. All right, not that you're having two order flows at once. So if you extend this to the future, you can see that there was, oh my God, you can see that price actually, you can see price came and reacted that point again. So you had a kind of little sell. How many pips was this? It was like 5. Okay, wow, wow. This was like let's say, let me just measure that one. How many pips was that? Maybe if you call this little drop off, this was like 72 pips. Like 72 pips. Right, like 72 pips. The market gave that, and then you can see how market still found it difficult to go below, to go above it very easily. Market actually gave another sell here. So if you cut another sell, you have got this first sell, this second sell, the market actually was moved and became what bullish, right? So somewhere around there, the market became bullish. When the market took out this, this high here, somewhere around the market became bullish. I said making bullish order flow. All right, you can see how this last push down made what a very big push to the upside because the market came back there, tapped it, and then pushed above, right? So this is happening on repeat, right? It's happening on repeat. So not all other flows get mitigated. Sometimes other flows get left out. So you have to always look at the current structure of the market as well. So current structure is also a very unique part of the market. What is the market? What is the current structure of the market? And what is the current expectation of the market? All right, look at that other flow here. Last push down before what? This was the last push down for the market was broke to the upside. Because the market came back here nicely, came back the second time, and then was pushed to the upside. Right. Here's our next order flow here. You can see, okay, this is our next order flow here. Right, market and let's push order flow here. This was the last was push down before the whole break. So we had this last push down. Price it was came back to the order flow. Right, you have to always look for confirmation there. Market was broke above. We have our order flow again. Look at this is the last push down before what this heavy push to the upside. Right. So what happened there? You can just mark the whole order flow there. Right, mark the whole order flow and wait for the market to give us a confirmation. Right. So order flow helps to know where to wait for price. So this was order flow. You can see how price came back to it, pushed up, but it failed to go above, and then finally what gave up the ghost. Right, and then we took out this order flow, and then we broke back bullish. Right, we broke back bullish. Right, so we broke back bullish. Last push down, market made an order flow here. It went, you can see it's pushed down. The market was broke up. Although this was not very convincing, but market still came back to it. You can see our price came back to this last push down, and then what pushed to the upside, right? First one, look at this last push down before what this impulsive move to the upside. So we had another order flow here. Want to see the most dynamic downward push? See another order flow there, right? You can see our price. This was a push down, and then what broke above. So you have to look at the most dynamic one. Where is the very clear push down? Right? Someone will say, someone will say, okay, this is the last push down. You say you would have missed the trade. Someone will be okay, this is the last push down before they break. You're not wrong, but this was over. This push here, right? If it's where maybe you're trying to refine your entry, right? But you don't want to be refine your entry this way because look at this devils here. So this relatively called loose. Can you see that? So you have to be very careful when you're refining entries. Right, very careful with that. So this will be the correct order flow here. You simply mark the whole zone, and then what do? You wait for what a lower time frame was confirmation. So order flow is not included directly. It's just to tell you where the market will likely turn from, and then you look for what the market to give what a confirmation on your lower time frame. Because the market came back here and they give what a confirmation, right? This is very beautiful, right? Very, very beautiful. So seeing another flow here, it was the last push down for this push to the upside, right? Although price did not come back to it, right? Price didn't come back to the order flow. Instead, they made another one. So had another what? Another push down, right? Before market came back to this one, then see another order flow here. It was the last push down before they break to the upside. You can see how this thing is respecting nicely. Right? See another order flow here. So it was the last push down before the break to the upside. Market respected it nicely. You can see how the rest is history. Where's our last order flow here? This was the last push down. Right? So price has not come back there yet. It hasn't come back there yet. So let's see. It hasn't. Right? It hasn't come back here yet. So consider this is occur nicely, right? This is occur very nicely. Right? So sometimes market doesn't come back there. But it doesn't mean that you are wrong. Right? Look at this one now. Market broke bearish. What was our last order flow from here? Look at the last push up here. So you can see how price came back to the other flow nicely and then was broke the downside. Where's our next order flow here? Market pushed up and then broke down. So you can see how the market pushed itself from somewhere around there. So you can see other flow mitigated and then went down, right? So what happened there? So the market changed from being bullish to from being bearish to bullish somewhere around there. That's kind of bullish break here, right? So take note of that. So we had a kind of bullish break here. Right, since I can market take out this high and then so that's all of that. So you can see how this is occur on repeat. Right, this order flow was very large, right? If you ask me, this is the last order flow. Because you can see this is where all the red candles started. So around the market giving this red candles to the downside. Right. So someone else would have been like, okay, this is the order flow from here. But let's just work with this because this is where I can see the last retracement and the market was pushed to the downside when it was breaking up. Because the market tapped in there nicely and that was still rallying higher, right? So you have to also combine other flow with other things. Not that you just trade other flow just like that. You have to add other things like current market structure and all of those fun stuff, right? So typically, you're looking at the last push down or push up before the market makes a new high or a new low. You mark that whole zone, right? No matter how much it is, you mark it and then you wait for market to what come back there and give you what a lower time frame confirmation to know the exact place. Also, you can use your Fibonacci tool to know where to look for. So if maybe I did from here, my Fibonacci tool from here, right? I took it from here to here. So you have said this is also the night. Because market came to what around around sorry, markets came to very close to the 62% level and then what it rallied. So it came to the 50% level, which is equilibrium. So you have to use Fibonacci tools or other things to do what to line up your analysis, right? Very, very important. So that's basically how you identify an order flow. It's very, very easy to identify. So let's just quickly look at another pair. Let's look at the Nasdaq to see if you can also identify order flow on the Nasdaq. Right. Right. Let's see. So this is also we will not go too far for this one. Just maybe current price action. Let's start from somewhere around it. Right. Let's start from somewhere around it. Right. So what can we see here? Market is bullish, right? You must also consider the trend. Market was bullish here. This was the last push down. The market was broke above, right? So I can see got some order flow here. I can see our price came back the future. Last push and before the market was took out this high. So order flow hits and then what happened? You can see we had another the markets came back and then came and tapped back there and then to the upside. Right. So where's the next order flow here? Look at this order flow here. It was not this one was not tapped into. It was left clean. So the last push down before was this impulsive move. That was not tapped in. It was left clean. That is not a problem. It happens, right? So where's our next order flow here? Because this last push down somewhere around there, and then what happened? It was the last push down, the market was broke to the upside. So the price come back there, yes, it did. So market finally did what? Made all this liquidity here, and definitely what? Came back, tapped into other flow here, and then what happened? Market pushed, gave this bullish rally. And I watched something happen there. Market made what? A bearish order flow here too. So market actually broke structure somewhere around there. We had a break of structure there. We had what? This bearish order flow here, right? So this was a kind of mix. It was a kind of serious mix. So look at this. Look at the markets broke this low. made a bearish order flow there. Markets came back there, tapped into it, and then broke down. Even inside there, we had what another order flow there. Watch this. So I had a confirmation. The market broke below the swing low here. Where's our order flow there? Here was the last push up, right? You can see another order flow here. Market broke this low, made another flow here. So if you sold inside it, that'll be nice. Cut to the downside. Where was another order flow here? You can also streamline your order flow by using what the close price of the candle. So I'm using this place for my order flow, and then you can see using the body of the candle too. So you can see how markets came here, put order flow down to the downside. Watch another one there. I'm using the body of the candle just to avoid these wicks. So you can see that as well. Order flow, market came out, they tapped into and then was the downside, right? You can see that order flow here. Okay. Okay, price broke below, came back to this one, then dropped down. Right, so brackets can be very, very tricky sometimes. Right, so if you were to ask me, okay, see another flow here, watch this. So you can see this, and the markets came back to this other flow there, do what? Broke down. Well, this is where market broke through. So from here, price breached our other flow here. So we had a breach here, and this led to what? A bullish break of structure, right? So the market breaches other flow here, it made what? A bullish other flow instead. So always note that when the market breaches an other flow, it kind of creates an opposing other flow. So the market broke this other flow here, it made what? A bullish other flow. So bullish simply means that where's the last push down? So somewhere around there, down to the downside. So this is our whole order flow. So what do? You simply do streamline it by doing what? Adding your fib to other confluences. So if you add our confluences now, I think okay, I take it from here to this body. I'm using body to the body now. So you can see body to the body of the candle. I'm using the body of this candle to the body. Whenever you see very long wicks, use the body of the candle, right? Whenever you see long wicks, use the bodies of the candles, because that is where the main volatility is. So I'm just going from this body here to this body there. So as the market came up at what? The 62% fib level, right? This is what we call an OTE level, right? And the market was right to the upside, right? So you can use this is how to see if the other flow is too much for you. You cannot simply use your Fibonacci to get the discount levels, which I taught you guys in the first two teachings of this course. Get your discount of premium levels, and then you look for what lower time frame confirmation inside there. All right, so let's see. Did we get to the lower time frame confirmation that inside there? Yeah, we did. We saw a kind of bullish break here. Markets came back, retested this imbalance here, and then that was it. So markets took out the swing high here, right? That's a bullish break. Came back, tested this imbalance here. So if we were to judge by that, so we had what a bullish break here. So if we take out our fib2 from this body again to this body here. I don't know, this people can be very annoying sometimes. Shouldn't just place where you want to place. Alright, let us manage it like that. So you can see our primary care what to this came back after I broke this swing high here. Right, look at the swing high I'm talking about. So this is swing high I'm talking about right there. Right, look at that swing high there. Right, went above it and then came back to what our OT level again. So if you want to make an entry better, I will just use this OT level. This will be a better entry for you. Right, so this is as you know, maybe we want to take our trade from here. So maybe I'll just use 60% level. So entry somewhere around there, stops below the low, right? And then the first target should be 0 minus 0.27. You can see. So this was like 1:2. Okay, actually hit 1:2 somewhere around there. So as you can targeting this previous high here. So that is all the fun stuff about this, right? So I don't want to make this call too long. I don't want to make this call too long. You want you guys to backtest with this information. Don't just go and start doing this live. Whenever you see another flow, remember you can use your fib to make it smaller, like to reduce your area of interest so it will not be too large. Then you can also wait for what market confirmation before taking your trade. Right. So as we continue, we'll begin to talk about liquidity properly from tomorrow. Liquidity will take like I don't know. Liquidity is usually a very long topic. Liquidity can take as much as 3 or 4 days because it's a very lengthy topic. That's why I've been kind of weary about talking about liquidity. But by God's grace, we are going to talk about liquidity from tomorrow, right? We'll start from liquidity one by one, one by one, one by one, one by one, and then by God's grace, in the next 3 or 4 days, we should exhaust liquidity, right? I don't want to make any video too long. That's why I'm taking my time to teach these things one by one, so the videos will not be too long, right? Remember to participate in the giveaway. Start giving me on your social media handles. Share these videos for more reach, and see you guys in the next teaching.